Hello everybody, today we're going to go over NIO stock again. We've been going over NIO for the past few days, but we're in a really nice buying opportunity right now at around the $40 range. And while NIO's earnings weren't the best ever and the semiconductor issue, which is going to halt the vehicle production by somewhere around 20 to 25% over the next quarter, thinking long term this thing has a massive growth potential, and I could see $60, $70 by the end of this year. And that's 60-70%. So that's why I'm talking about it so much. So I think you guys are going to like the analytical approach today. So stick around and remember to subscribe if you do enjoy the video and want more NIO and other stock content as well. This won't always just be NIO, but I talk about stocks that I am buying a lot because I like to be straightforward with the community and the community we're building. I'm not going to fluff any numbers. I'm going to tell you guys that I'm buying NIO at these ranges. And if it goes down, you guys know I lose money. If it goes up, you know I made money. So that's the way we do it around here. So let's get right into this video. So just by looking at the chart, guys, I'm just going to explain what you guys are looking at. This blue line is the 10-day moving average. This is the 100-day moving average, this orangish yellowish line. And then you have the 200 down here. And then these are the two support and resistance lines that I see being the bounce potentials. Okay. So this 100-day moving average has been a good little line of resistance here. It's always been bouncing off this little line here. Okay. But after earnings, it broke this and we're coming down to the $38, $39, $40 range. And this is the strongest support we've had of this entire stock dating back all the way to November. It has always been bounced off this line, and every time it hits this line, it has a strong bounce. And this is why I'm so bullish on this right now, is not only is this company, of course, a lot further advanced than it was in November, so I don't see why the stock should be the same price as November, but also we are coming close to this resistance line, okay, or the support line rather. Now, once we do hit this support line, I could see a big bounce back up to the $54, $55 range, and that would be the base case, right? If it goes even further, if March deliveries are incredible, which I don't expect them to be due to the semiconductor issues, we could see even a stronger bull run. But 50 to 54 is a very strong short-term gainer, and that's within the next few months, which would offer us a pretty good upside. If I go to the draw tool here and go trend line, from our bounce line all the way up to around $50 is 25-ish%, all the way up to 54 is roughly 30-35%. So a lot of upside there is what I am seeing. Now, the one issue for all you guys holding this long is if the market keeps correcting even further. If we see another 10% drop, well, NIO's going to drop too, just like any other stock. I mean, hopefully we don't see that because that would just be bad for our portfolio in general. But as for NIO, the next resistance line is the 200-day moving average, which would bring the stock down all the way to around $30 per share. The real headwind of NIO at the moment is definitely the chip shortage. As you guys could see right here, this is a CNBC post, but they did mention this in their earnings report, is that the shortage in semiconductors and batteries will cut its production capacity in the second quarter to 7,500 vehicles a month, down from the projected 10,000. Now, this is still great increases. So in February, they delivered about 5,500, I think it was, and then in January, 7,225 vehicles delivered. Now, if we're estimating still 7,500 until about July is when they expect this to be over, we are still looking very good. But short term, there's a lot of headwinds at this stock, and that's why we've seen this massive drop and why it's just chilling around, $40. And it could consider consolidating here. We don't know yet, and this consolidation could continue for months until we see a pop. Either way, I think the pop is destined to happen here soon. Even if that's 2 months, that's still considered soon, considering it's going to pop for 30% in my opinion. In March, we could expect about 7,200 vehicles to be delivered. And over the quarter, we need about 20 to 25,000 for the stock to just stay and not fall any lower. Because if we do see some bad news bears coming in, we could see a massive loss per share, which was already pretty bad. They lost 14 cents per share right about here, 14 cents per share, which we wanted it to be around 7 to 10, really preferably, but 14 was the top range of analyst projections, and we got just that. We got 14 cents per share, which is obviously not a good thing, losing 14 cents per share. By next year, I think we really need to start seeing some profitability. Even if it's very slim margins, we need to see some profitability with how much money this company has raised in the past just by the stock price soaring. They've raised so much money. They've been able to expand so much faster. And with all of our shareholder money that they're able to use, we got to start seeing profits being turned by, I would say 2022, 2023 is when we need to start seeing slim profit margins. But with the expansion into Europe and potentially the Americas here soon, that is where this growth is even going to expedite even further. But preferably by July, we should start seeing this thing pump out its max production of 10,000 vehicles a month. Until then, though, as we have the chip shortage and such, we're going to have a 25% reduction in production capacity, all because of something that no one can really control. And this backlog of semiconductor is just so long that it's going to take forever to keep up. You got to be able to hit that equilibrium to the point where we're satisfying everything. As cars are getting more technologically advanced, we need more chips for these cars, as well as everything going online. We got computers, phones, everything needs a chip at this point. So we're going to need more. I mean, AMD's a good looking stock right now because of this semiconductor shortage. I can see that one taking off here soon as well. But finally, I do want to touch on CCIV real quick, just shortly, because it broke this resistance line that I thought it was really going to bounce off of. Now, the next line of support is down at the $20 range. Now, this is dangerous territory for CCIV. We have some rumors about them merging with, or not merging, but being acquired, working with Apple. Now, that's just a leak at this point, just rumors, just like this whole run up was just a rumor and then a tank down. All this is just a rumor, but we could see this thing's at $24 right now. It could go down to $20, and that is obviously not very good. That would set us around a $30 to $40 billion market cap compared to NIO, which is a company that's already producing vehicles, which is sitting at around $65 billion. Now, NIO is one that I think is worth approximately probably around 70 to 85 billion, depending on how much they could deliver in this next year. Now, 80 billion is definitely the bull case, but that would give us a great increase in stock price. Plus, another bull run would also help out with all of our tech stocks, including NIO. But that's roughly my thoughts with NIO. This is going to be the last video on NIO for the next few days, at least, until we get some new information. I don't want to just keep posting NIO videos, but I do want to update you guys on my positioning here. I am continuing to buy down at the $40 to $40 range. If it goes any lower, I'm still going to keep buying. At this point, I'm not spending all my money at once, right? I'm cost averaging in, as in today, if I had $20,000 that I was going to put into NIO, I would have put in 3, okay? And then tomorrow, 3. Then I start seeing a reverse, I just put 5 in or something like along that line. I don't want to just drop 20 in right now, because what if I put 20 in and it goes to 37? Well, I wish I would have had 15 left so I could put 5 more there, and then it drops even further, because no one can predict what the stock is going to do next. All we could do is look at these really strong support lines and just hope for the best with the bounces and hope for the best with the market. Overall, if you're bullish about NIO, this is just a buying opportunity. Treat it like that. Don't get mad at anyone because you bought at $60. That was your decision. I, of course, never recommended you buy this stock at $60 because, in my opinion, that was just a euphoric number. But down at 40, that's where things get a little bit more interesting. So hopefully this helped you in any way. If it did, like the video, and I will see you guys in the next video. Have a great rest of your day. Bye-bye.